In this second module, we turn from the expenditure side to the financing side of public economics. We will study how governments raise revenue, the implications of taxation, and the challenges posed by globalization, demographics, and institutional structures. Section 1: Principles of Taxation and Optimal Tax Theory. Taxation is the primary tool for financing government activity. An effective tax system must balance efficiency, equity, and simplicity. Efficiency requires minimizing distortions in labor supply, saving, and investment. Equity requires fairness in burden sharing, often through progressive taxation. Simplicity ensures low administrative and compliance costs. Optimal tax theory analyzes how governments can design tax systems that achieve the best trade-off between efficiency and equity. For example, high marginal tax rates may reduce work incentives, while regressive taxes may burden the poor disproportionately. Section 2: Tax Incidence and Distributional Effects. Tax incidence asks the question, who really bears the burden of a tax? For instance, while corporate taxes are levied on firms, the actual burden may fall on workers, through lower wages, or consumers, through higher prices. Understanding tax incidence is critical for designing fair and efficient systems. Economists use both theoretical models and empirical studies to estimate these effects, highlighting the complexity of taxation in modern economies. Section 3: The trade-off between efficiency and equity in taxation. Policymakers face constant pressure to balance growth with fairness. Efficiency-focused systems favor broad-based, low-rate taxes to encourage productivity. Equity-focused systems use progressive income taxes and social transfers to reduce inequality. The trade-off is not absolute. Well-designed policies can achieve both goals, but tensions persist, especially in highly unequal societies. Section 4: Globalization and Public Finance. Globalization complicates public finance in several ways. Tax competition: countries lower corporate tax rates to attract investment, leading to race-to-the-bottom dynamics. Capital mobility: wealth and firms can shift across borders, eroding national tax bases. International coordination: organizations like the OECD and G20 are working toward global minimum corporate taxes to reduce evasion and avoidance. Globalization also increases demands on governments to provide adjustment policies, such as worker retraining and social safety nets, for those displaced by international competition. Section 5: Demographic Challenges and Public Sector Sustainability. Demographic shifts pose long-term challenges for public finance. Aging populations increase the burden on pensions, healthcare, and social insurance systems. Declining fertility rates reduce the tax base needed to finance these commitments. Migration can either alleviate or exacerbate fiscal pressures depending on labor market integration. Sustainable public finance requires reforming entitlement programs, encouraging labor participation, and adapting taxation to demographic realities. Section 6: Institutional Economics and Governance. Institutions, the rules, norms, and structures governing society, play a critical role in public sector performance. Strong institutions ensure accountability, transparency, and rule of law. Weak institutions often lead to corruption, mismanagement, and inefficiency. Empirical research shows that institutional quality is strongly correlated with economic growth and effective public service delivery. For advanced public economics, understanding the institutional context is essential for evaluating the effectiveness of fiscal policies. End of Module 2 Summary. In this second module, we examine the financing side of public economics, taxation principles, optimal tax theory, tax incidence, and the efficiency-equity trade-off. We also explored the implications of globalization, demographic changes, and institutional quality for public sector sustainability. Course conclusion. This course on advanced public sector economics has been divided into 2 modules. Module 1 focused on the expenditure side, public goods, externalities, redistribution, social choice, and fiscal federalism. Module 2 turned to the financing side, taxation, incidence, global challenges, demographics, and institutions. Together, these modules provide an advanced and comprehensive overview of the key theoretical and empirical issues in public economics. Understanding these dynamics is essential for policymakers, economists, and citizens who wish to engage critically with the role of government in modern societies.